Welcome to the F Sharp Podcast, presented by Harmony Wealth, a podcast geared to educate you on all things financial. Co-hosts Tanner Bortnam and Adam Henning discuss various financial topics presented in a consumable and entertaining manner. Tanner is a certified financial planner, JD, and financial expert, while Adam is a marketing professional and small business owner. It's time to harmonize. Sit back and enjoy the episode. Your future self will thank you.
Welcome, everybody, to the Financially Sharp Podcast presented by Harmony Wealth. I am your co-host, Adam Henning, marketing professional and small business owner. I'm joined, as always, by Tanner Bortnam. Tanner is a certified financial planner, JD industry expert. He's also the president and founder of Harmony Wealth, a privately owned, independent, fee-only wealth management firm that specializes in financial planning and investment management. To learn more about Harmony Wealth and how it tailors a financial plan to best suit your unique financial behaviors and goals, visit harmonywealthaz.com. Before we jump into today's episode, if you like what we're doing here, we kindly ask if you hit that subscribe button on whatever platform you are listening to. If you're on YouTube as well and watching us, hit that subscribe button, leave us a review, and share with your friends and network. It is the best way to help support this podcast. Episode 53. In this episode, we're going to cover the final quarter of 2023 and our standard quarter update. We've been doing that for all of 2023, right?
Mm-hmm.
I can't remember if we started in late 2022, but it's been a standard cadence with market updates every quarter. So as we close out 2023 and look to 2024, that's scary to say, a presidential election year, it could be kind of interesting. So as we sit here a couple days before Christmas, Merry Christmas, Happy Holidays. Welcome in, Tanner. Last year you wore a Grinch sweatshirt. This year you're a little bit more festive.
That's right. I have my Manchester United Santa's Little Helper shirt on for those watching us on YouTube. Even though we lost today, still crushing defeat, but still important to support even tonight on the podcast. So
I won't say my joke.
Please. Unless it's, perverse and you can't.
No, you wouldn't appreciate it. Little is
okay. No, it's fine. That's funny.
Had to.
If you look at my wedding photos with you and the other, groomsmen, it definitely makes sense. You guys are all giants compared to me.
Sorry.
Nah, it's all good. You guys are like my bodyguards. It looks pretty awesome, actually.
I wouldn't trust me with anything like that, but anyways, how are we looking to wrap up 2023? What stands out from a market standpoint?
Yeah, it's well, I mean, for anybody that's been paying attention to the markets, we've had a really, really great run here at the end. Going into the end of the year, we'll see how the last week plays out. Sometimes they call this the Santa rally. Going into Christmas, sometimes it's what happens right after Christmas. But anyways, this year we've had a really, really strong run from really about the end of October, beginning of November, depending upon kind of what sector. Most everything is up and up pretty big. I mean, the S&P 500 is up something like 15% in the last 2 months alone. So yeah, really strong end to the year. Always a good thing. The markets are going up. Never going to complain about that. But as our loyal listeners know, it does kind of wave some caution flags when things go up this quickly. And I do think that there is some potential for some potholes, so to speak, in 2024. Now, do we hit those potholes necessarily? Maybe not. That's kind of yet to be seen, but definitely not going to complain about markets doing really well to end the year. So it's kind of where we sit with where the markets are.
Does quarter four usually perform better than other quarters, just given the end of the year, or why is that? And if it,
Yeah, so so statistically, I wouldn't necessarily say it performs better than other quarters um overall, but statistically quarter 4 is up more than it's down. Now when it's down, it's usually down pretty bad. That's kind of the flip. But it usually, you have this Santa rally. A lot of people are out spending money for Christmas. They're out traveling. They're out, buying things for gifts. They're out going out to eat. You're buying a lot more food. All of those activities that really, help churn the economy. And so businesses are making more money as well because people are out spending more than they normally would, just because you have Thanksgiving in there and then you have Christmas coming up, end of the year travel, all of those things kind of wrap up into um, higher profits for, for a lot of companies. And then also like a psychological thing. I think there's just kind of a, looking forward to, okay, whether the year has been crappy or whether the year has been great. I think we always kind of have that,
Hmm.
renewed sense of, hey, next year's going to be great. Next year's going to be better. Next year's right around the corner, and just like we've talked about on other episodes, right? People set their New Year's resolutions. If you need to change something, I'm the type of person where if I need to change something and it's August, no, I'm just going to set that goal and I'm going to change something. But a lot of people wait, it's like a good time to set new goals, a good time to do that. So I think there's a little bit of that too that's kind of built in psychologically, that there's some anticipation, some optimism every year going into the next year, because the year's almost over, clean sheet, we're going to start new and things are going to be good again.
Makes sense.
Yeah. Doesn't always work, obviously, but I think that's probably what, mainly plays into quarter 4 being a good quarter most of the time.
Sure. Let's talk inflation. How are we landing? How's that soft landing? I know we bring that up quite often. But
Yeah.
what are we, as we flip the calendar, what are we hearing and prospecting from more basis points hikes, or maybe even some relief coming our way?
Yeah. This is the first, quarterly update where we have kind of some new information on this. The Fed left rates unchanged in December, so we're still at the 5.25 up to 5.5 range. But in their, Fed Chair Powell always gives a speech, and in this speech was the first time that he had sounded more dovish. For those who don't know, it's hawkish or it's dovish. Hawkish means raising rates, more of a predatory bird. Dovish is more towards cutting rates, so, easier, softer, cuddlier. I don't know, however you want to think of a dove. And this was the first one that he's had in quite a while where he has had some of that dovishness, and even brought up the potential for rate cuts in 2024. He had never discussed that before, and kept saying it's premature to think about that. They have to get inflation under control. Inflation does continue to trend down, albeit very slowly, very slowly. But anyways, the Fed has left rates unchanged and has signaled they may be looking at rate cuts next year. Again, they always say dependent upon the data and those things, but kind of tying that into why the market has done so well into the end of the year, that's a really big one. The market, and lower interest rates are better for the economy. Now, is it better overall for everything? It's debatable what you want to look at, right? Some people think yes, particularly if you're in the real estate market. Some people say no. It's, again, to each their own. We'll just kind of leave it at that. But lower interest rates does allow businesses to borrow money cheaper, so they're more willing to do so. They're more willing to expand. When you expand, you typically are hiring more people. When you hire more people, it churns the economy. So having, at least on the lower side of interest rates, is beneficial to growth in the economy. And because the Fed has suggested or hinted at the fact that they may be lowering rates in 2024, the market really took off. I mean, it had already been doing well over, November, but like it really did well after that because the market's always forward looking, and so it thinks that soft landing is pretty likely at this point where the market has priced in and where it's at right now.
Are we seeing any continued effects from the Ukraine war and the latest conflict
Yeah.
in Israel and
Um,
Palestine?
yep. Again, keeping this purely on the financial side and not the actual geopolitical side of things. Definitely seeing some ramifications from that. You know, we're we've had numerous bills that have been passed authorizing spending to send aid to different parts of the world and throughout the different conflicts to send um, ammunition, to send defense supplies, things like that. Um, so that definitely plays a role. I mean, it's the spending side, right? That's what we're looking at. Again, we're not getting into the political side of this of right or wrong. Everyone can make up their own mind on that. But the from the spending side, we've spent hundreds of billions of dollars to this point. Um, and it's primarily the Ukraine war because it's the one that's been going on the longest. But we've spent hundreds of billions of dollars, and that, as we've discussed before, governmental spending is an igniter of inflation, and so it does have an upward pressure on inflation the more that the government spends on anything. And so yes, these conflicts play a role into that because we're spending money to send aid, or like I said, to send whatever, to give money, to give whatever we're giving. It does have an upward impact on inflation.
Yeah, something to continue to monitor, obviously.
Right. Yep. And of course, we'll state as well, when it comes to situations like this, money is obviously not the only thing people should be considering. We're only speaking on that aspect of it. Many other factors that the government has to consider in terms of both of those conflicts, not just the financial side. But just want to make sure we're putting our disclaimer out there so we're not tiptoeing into anything.
Yeah, moving on to the election year focus. We weren't recording at our last presidential election, but we did do an episode. I'm looking that up right now. In 2022, speak or talk about what the market usually does in an election year, specifically a presidential election.
Yeah. So again, historically, an election year, primarily or specifically, I should say, specifically a presidential election year, the markets tend to do, I'll say anywhere from okay to pretty well. Again, there's numerous reasons for this, but one of which we kind of talked about, right? There's a newfound hope from both parties that they're going to get, either continue with what they are already happy with or get a new person in, depending upon where your stance is. And there's this newfound optimism that, okay, the next 4 years are going to be different. So there's kind of that's built into history. Now, what really actually scares me or is I don't want to, scares me probably is a little bit too strong. What I am paying attention to, because one of the risks of next year that I see is, we're going into this election, and if we learn from history or learn from the past, 2 years ago, the Congress that was in place and the president that was in place at that point, jeepers, struggling with that. They passed several new laws that spent I mean, something close to like $3 trillion. I don't remember the total number off the top of my head.
Mhm.
Well, again, we just talked about it. That spending money, the government spending money and putting that money into the economy has a upward pressure on inflation. So as much as the government won't ever acknowledge that they had anything to do with the inflation that we've gone through over the past 3 years, they have a very major role to play in. Now, it's not only their fault by any means, but they have a very major role in this. And I guess that's one of the things I will be watching is, do we continue that? Like, does that happen again? Is there going to be some bills that are passed? And this year will be a little bit harder, right? Because there's a split Congress. So I would say, is there executive orders that are passed that spend a bunch of money to, let's just call it what it is, to try to buy votes right before the election, and that has an inflationary impact, because it's more money being dumped into the economy. Does that happen? I think there's a pretty good chance of it. I mean, we've kind of started to see this as a new trend in politics, that we just pass a bunch of bills, make people happy in the short term, and then they vote for whoever, passed the bills. So I think there's a reasonable chance of that happening. Now, how big are those bills? How, all those things are yet to be seen. If it does happen, how much of an impact will it have on inflation? Yet to be seen. But it is something that, will have, if it happens, it will have an impact on inflation to the upside, which is not what we want. We need it to keep coming down. And, the Fed's goal is to get it close to 2%. And the lower and lower that that inflation gets, the harder it is to keep going down. Like the first 1%, when we were up at 7-8%, that first 1% super easy. Think of it kind of like golf, right? When you're just learning how to golf, it's really easy to learn how to break 100, but then it's harder to break 90, and then it's really hard to break 80, and then it is really, really, really hard to get below 70. I mean, inflation's the same. It's just like that with anything. The closer you get to that, the starting point is way easier. And so I don't think we're out of the woods yet. I don't mean to scare anyone with that. I think it is premature to call for a soft landing at this point until we have seen that it happens, because there's too many other things. There's these other potholes we're talking about that could come up, and that could derail inflation a little bit. And then, well, now what happens? Now what does the Fed do? And it may not be a soft landing. I think the probability of a soft landing has definitely gone up from the last time we've had, our quarterly updates, and especially from 6 months ago and a year ago. The probability is significantly higher than it was then. The Fed's done a pretty good job up to this point, by continuing to increase that probability of a soft landing, but we're not there yet, I guess I would say. And I think people who are championing that, I think they're getting a little bit ahead of themselves.
Episode 31 was the episode we recorded in November of 2022.
Sure. Yep. Right before the previous election.
Does the market care about Republican candidates versus Democratic candidates? So that may be a note to go back and check out. We'll probably I'll mark that down as homework for me to listen to as we head into this year, which I'm sure we'll talk a lot about election and candidates and all the different fun stuff that comes along with that.
Once we get closer.
Yeah. Any other potholes you want to talk about looking forward into 2024?
Not. I mean, I think we've kind of touched on the last one. Really, just to that we kind of had on here. Is just I don't necessarily think we're out of the woods yet. So I don't. For my clients, we're still being fairly cautious on some things. I don't think that it's probably the time to say success, green light, go, everything's in full growth mode, even though that, those sectors have done really well over the last 2 months. I just, trying to chase that up from here. Where the market is currently, it has done really well over the last 2 months. But, if you look at it, the Dow went over and set all-time highs, but the S&P and the Nasdaq still, as of this recording, haven't gotten above their 2021 highs. So we've had a really good run these past 2 months, but again, we're not necessarily out of the woods, and we may still hit that soft landing. I think it would be prudent for people to make sure that you're doing your own research and you're chatting with your advisor and all of those things. But just I think it's a little bit too early to be claiming that. And again, one of the risks is I think the market is pricing in that we for sure will have this soft landing in 2024, which that brings about more risk for any negative news that happens to come out. I mean, if some kind of negative news comes out in, let's say, March of 2024, it's going to have a bigger impact now because we're pricing in this soft landing. And so any little bit of negative news is going to cause a bigger drop in the markets, because we're kind of in this euphoria right now as if everything's rosy and great. And, it might not be yet. Hope it is, obviously, definitely hope it is. But, just make sure you're doing your research and not necessarily having the FOMO, which we've talked about in previous episodes, and being worried about missing out.
When are we out of the woods? When isn't there going to be negative news? Come on.
Oh, no. So there'll always be negative news. I'm meaning in terms of the inflation. We're closer to hitting that soft landing, but we're not there yet. The Fed isn't done. They're not happy with, they're happy with where inflation is overall, but it's not their goal yet. So they're not done working. They need it to keep coming down. Mm-hmm. And until it gets down where they want it to be, that's still time where things could go wrong. And if, and then that would not be the soft landing. So that's all I'm trying to say is the market seems really expensive right now, because it thinks we will have this soft landing, and it thinks that the Fed is going to cut interest rates, 1, 2, 3 times next year. And are those things guaranteed? No, they aren't. So anyways, that's all I'm trying to say is just don't worry. Don't try not to have that fear of missing out. Be prudent. Do your research. All the things we always talk about. All the things. Don't let that emotion kind of take over you when you're looking at things right now.
Anything else before we wrap?
No, I think that's good. Yeah, Merry Christmas or Happy Holidays to everybody, however you celebrate with yours and your family. Thank you all to our listeners for another wonderful year. And we're looking forward to 2024 and trying to continue to provide good entertainment and information that you find helpful.
Oh, do I even have to do the end?
Well, a little bit now.
Well said. That wraps up another. Go ahead. Oh,
I was just kidding. I tried to take some of the heavy lifting for you this time.
Yeah. Last one, best one. That wraps up another episode of the F Sharp Podcast. We thank Tanner for his insight and knowledge. Also, thanks for tuning in. If you enjoyed today's episode or this episode, don't forget to subscribe, rate, leave us a review. If you're new, we invite you to listen to previous episodes that cover a wide range of personal finance topics, which you can find right here, Spotify, Apple Podcasts, or wherever you listen to podcasts. If you have a question or suggestions for a future episode topic, shoot us an email at podcast@financiallysharp.com. That's podcast@financiallysharp.com. For Tanner, I'm Adam, reminding you until the next episode, stay financially sharp. We'll see you in the next, see you in the new year, 2024.
This podcast is for informational and entertainment purposes only and should not be relied upon as a basis for investment decisions. This podcast does not engage in rendering legal, tax, financial, or other professional services. Investment advisory services are offered through Harmony Wealth, a registered investment advisor authorized to do business in states where registered or otherwise exempt from registration. If you have questions pertaining to your specific situation, please contact Harmony Wealth at 602-935-5155 or at harmonywealthaz.com.